problem is that most people are defeated by these recessions. They're already in a bad spot, and the things that they do during a recession make it even worse. The Donald Trump trade war has officially started. The United States stock market is crashing, and we are spiraling fast into a recession. These are very fearful times. However, I do believe that if you are patient, if you plan properly, there are going to be a lot of fruitful opportunities waiting for you during a recession. What's up, guys? It's Crypto Dave here, and in this video, I want to discuss why I think recessions are great opportunities to build wealth and some of the things that you can do to prepare yourself for the opportunity that will ultimately lie ahead. And while these recessions can be absolutely destructive to several industries of business, they do present fresh opportunities within the world of business, within the world of financial markets, or even just as a personal thing. There are great opportunities to take advantage of. The problem is that most people are defeated by these recessions. They're already in a bad spot, and the things that they do during a recession make it even worse. So in this video, I want to discuss how to avoid this. I want to start with just a little bit of context on the monthly time frame to just express how normal these recessions can be over time, how normal it is to see the stock market decline significantly in short periods of time, and to simply understand that as a long-term investor, right, if you're a young adult like myself, maybe you're even a young parent, you have children who are very young, you can start investing for them. There are great long-term buying opportunities ahead, long-term buying opportunities that literally do not come around, but every so often. And so we can see throughout time, starting with the Great Depression, we had about an 86% drop in the stock market. This was the largest stock market crash that we had ever seen. It was essentially a century ago, and it was arguably the hardest recession or the hardest time economically around the globe and in the United States. Ever since then, we've gotten corrections to the tune of 20, 30, or even upwards of 50%. So it's very reasonable to suspect, just by looking closer, knowing that we are really only down about 17% from our actual all-time highs on the index. There is plenty more room to go if we're simply basing it off of historical figures, right? Getting down to that 20, 30% mark would take you right back down to the lower 4,000 point level, or if we were to see more of a full-blown 50, 60% stock market correction, we could see us coming down to the sort of COVID highs, COVID lows from March of 2020 here in the 3,000 point range. And the objective here again, guys, is not to make crystal ball predictions or to tell you exactly where the stock market is going to go and when it's going to bottom, but it's just to give you guys an understanding that in a short period of time, being a couple of months, maybe even just a couple of years, a year or two, a lot can happen. It's going to feel like a punch to the gut, but once again, guys, these are going to be the best opportunities for long-term investing and responsible investing. And if we do want to be a little optimistic here for the stock market, our last couple of declines here in recent history have taken us around this 200-week EMA here. This bottom purple line that you guys see was essentially the bottom for us here in 2022, and we did get a couple of weeks closed below the 200 back when the stock market crashed during COVID, and of course a quick recovery. Prior to this, we have held the 200 weekly EMA as support on the higher time frames during these correctional periods for stocks where fear has ramped up, but the economy has held strong. We're currently entering a period of time where we do not anticipate the economy to hold as strongly as it had back during these periods of time, right? We remember recession talks back in 2016, back in 2018. Ultimately, these were just healthy corrections within the market. We didn't really get much rate hiking, and everything sort of stayed the course. Well, then you fast forward to COVID. Of course, there was a lot of rapid fear. We had a global pandemic. Fortunately, the Fed stepped in, printed a ton of money, and stimulated the economy, and the stock market recovered quickly. Now we move back over to 2022. This is when recession fears ramped back up again. Rates were being heightened, monetary policy was getting very restrictive, and people were being incentivized to stay more so in cash than they were to risk on speculative assets. Ultimately, the economy did not ever crash. We saw stable employment, we saw inflation starting to come down, and the stock market absolutely took off. So the point I'm trying to make here is that we came down to some of these longer term bullish levels of support, but each time the economy was able to stay strong and the growth cycle was able to continue, and that risk on environment was still being encouraged. But we need to understand what happens when the United States unemployment rate ticks up significantly. What happens if tariffs cause some massive price increases in certain industries? We see inflation creep back. We already know that the national savings rate for current United States citizens is very low. The debt is rising, the delinquency rates are rising, so people are in a very weak standing. It's unlikely, in my opinion, that some of these longer term levels of support are going to hold like they have in the past. So how do we actually take advantage of a bear market or a recession? Well, there's a couple of different ways, and the first thing that I want you to keep in mind is do not fall behind. This is a very important point to make because a lot of people like to live right within their means or above their means, which is usually why you have a massive car payment, a lot of credit card debt, a house that you can't afford, all of these things. And it's never good to be living at your capacity when times are good. It's especially not good to live at your capacity when times are tough. when jobs are scarce, when prices are rising, when savings are depleted. We need to adjust our attitude with personal finance overall and how we live our life, and truly ask ourselves, how can we be frugal? How can we be efficient with our money during a period of time where the monetary policy and the overall economic conditions favor those who stay in cash, who build emergency savings, and who focus on the things like high interest debt or making sure your bills are paid for. All of these things are very important. It sounds simple, but it's one of these psychological practices that is very hard for most people to actually get over. The second step is, let's discuss some investment options for you. For starters, I would strongly recommend ETFs or mutual funds or anything other than individual stock picking. We can get lucky with stocks all the time. We can even do our research. We can put a lot of time and effort into it. But the easiest way to make the most consistent returns is by simply broadening your exposure and getting into some ETFs or some index funds that give you exposure across hundreds, sometimes thousands of companies with all different investment objectives. Most commonly, of course, we're looking at the S&P 500 here. There are plenty of great options for you out there. I'm not going to spend too long diving into them, but try to find the indices or the ETFs or these overall investment products that are low cost and that are going to have broad, diversified coverage. It would also be wise to consider how you can make your investments tax advantaged. For one thing, if you're in the United States, you can open a Roth IRA investment account. This allows you to invest post-tax dollars you've already paid your taxes on into an account that is set up and earning interest tax-free, and you can always withdraw your contributions without any sort of penalty. If you're an adult that might have young children, it could be a good time to set up a 529 investing account, which is usually going to pay for your child's college, but there's also rollover options where the money can come back to you after that period of time, or even passed along to your child or rolled over into another type of investment account. Try to consider where you can actually build a legitimate investment portfolio and a strategy that considers low cost as well as tax benefits for you and your family. First, make sure you have an emergency fund set in place. Do you have 6 months of necessary expenses covered? In a recession, you might want to prepare for 8 or 12 months. If you do have this emergency fund, ask yourself, how much can I afford to invest on a weekly basis, bi-weekly basis, or monthly basis? Right? These are the things that are going to be very important for you. Now, the final piece of advice I would say is take a step back, consider your skills, consider your niche areas, and where that could benefit the economy moving forward. Recessions have never been the end-all be-all, and if anything, they are generally the birth of a new wave, of a new paradigm of business, of culture, of lifestyle. So find what you are good at, find the needs of the people around you, and try to determine where you can see opportunity for yourself outside of financial markets. But guys, we're going to be following the United States stock market very closely. We're also going to be following the crypto market very closely, and we're going to try to position ourselves as best as we can. If you want to do that alongside with me, simply subscribe to the channel. And until then, I will catch you guys in the next video. Peace.